All right, good morning, trade pros. Welcome to our morning market update for Thursday, January the 10th of 2019. This is George Papsov of Trade Pro Academy. I'm in the office here with the boys. They're in today. They showed up, and I don't feel that much lonely. And I'm also breaking a rule. They say don't wear white after Labor Day. Who's they, and why should we listen to them anyways? Well, I'm wearing white after it. And I don't know how long that time rule applies for. I'll wear what I want, all right? Labor Day. Let's get started with our morning market fun fact today. On this day, and this is actually fascinating to me. We're going to talk a lot about stuff today, but first I want to start with this fact. On this day in 1870, John D. Rockefeller founded the Standard Oil Company with $1 million in capital. Yeah, that's a lot of money for back then. And control of a tenth of the nation's oil refining. He went on to take over pretty much almost all of the nation's oil refining, to the point that his company was broken up by law. All right, it was contractually, he had to break up his company. He got so big. And of the remaining companies that survive, or what it was broken up to, Exxon's one, and Mobil, which is the two later merged, and Esso. And I was just telling the guys this in the office. Esso, ESSO. If you just pronounce it SO, that's Standard Oil. ESS is S, and then the O is oil. So there's he's left a huge impact on the oil industry still to this day. And from his Standard Oil enterprise, it broke down into over 37 companies individually. That's how big this thing was. Pretty cool morning market fun fact. Is it going to help you trade? Definitely not. Cool to know, though. If you pick up any ladies or gentlemen in the bar using that fact, please attribute it to Trade Pro Academy. Just kidding, you don't have to. In Asia, Japan's down 1.3%. Hong Kong's up 0.2%. China's down 0.4%. India down 0.3%. So some weakness in Asian markets. Today, we're giving back some gains after a pretty bullish start to 2019. In Europe, at midday, London's down 0.2%. Paris is down 0.8%. Frankfurt's down 0.4%. In the United States, Dow's down 0.4%. S&P's down 0.6%. Nasdaq's down 0.6% as well. We're seeing quite a bit of selling in equity markets around the world. A little bit of a pullback. And I'll tell you this: since the rally from the beginning of January, there's been a rally of price action with a decreasing amount of volume. So when you're seeing upside movement with decreasing price, or decreasing volume rather, that tends to tell you there isn't as much participation in this rally. It's more of a short squeeze than it is a legit rally. You have to know the difference. A short squeeze is a whole bunch of sellers getting squeezed out of their positions by having to buy, and a real rally looks like a lot of volume, a shorts cover, and new longs come into the trade. We're not seeing a lot of new longs buying into it. This Friday's institutional positions report should be very revealing and telling. It'd be very interesting to see. Okay, crude oil is down almost 1% today. Gold's up 0.2. Bitcoin's down 6%, back inside of 3,000. It got hit pretty hard. And that's it. This morning at 8:30, we had initial jobless claims. Came out at 216,000 versus 226,000 expected. The police are coming to get me. You hear the sirens? That's actually a fire truck. So, yeah. So 216,000 versus 226 expected. The 4-week average is up to 221,000 versus 218.8. So even though we had a beat or a positive number out of the unemployment claims today, the 4-week average remains higher. Okay, so it's edged up because of the previous weeks that push it higher. We have a huge economic calendar today. I'll tell you about it in a moment when we talk about the Fed and what they said yesterday. And we're going to talk about the government shutdown as well. Let's start with the government shutdown because the Fed one's going to take a little bit longer. We're 2 days away from this government shutdown being the longest on record. The longest has been 21 days. And yesterday there was a meeting between Trump and Nancy Pelosi, and he walked away in that meeting saying just bye-bye. He basically said, if we open the government for 30 days, will I get some border wall funding? And Nancy Pelosi said no. And he got up and said bye-bye and walked away. Pretty fun. So now the next move is the markets, and I think politicians are expecting Donald Trump to declare a national emergency to secure the funding for the wall and reopen the government. I saw a pretty funny a pretty funny image or meme yesterday. I'm going to share with you guys. It's not as funny until you actually look at the picture. But Donald Trump calls in to tech support and says, "Hey, my government's not doing what it's supposed to." And the tech support guy says, replies saying, "Have you tried shutting it down and turning it back on again?" Good times. Anywho, let's talk about the Federal Reserve and what we had on the meeting minutes yesterday at 2 p.m. Pretty interesting report on the FOMC meeting minutes. They narrowed the trajectory of the hikes going forward. Now they're seeing 2 hikes in 2019 and 1 in 2020. That's different by approximately 1 hike. Before, we expected to see 3 hikes in 2019 and 1 in 2020. So the pace of the 2019 rate hikes has been officially reduced by the Federal Reserve by 1 hike this year, or a quarter of a point. The FOMC also lowered its neutral rate from 2.8%, or from 3% to 2.8%. So not only have they decreased the rate hikes, they've also kind of dropped the target they're shooting for. All of that is dovish, meaning that it's more accommodative to the economy and to the stock market as well. All right. More accommodative policy does well for equities typically, and we'll see gold sell off and the US dollar drop, and that's what we saw. Now, if you think about it, the impact of the equity market, a dovish stance, it's very weird because a dovish stance is good for the economy on the temporary front. But don't get it confused. Them not being able to raise rates is telling you that they think the economy is going to slow down. So what's so good about that? Yeah, the stocks might get a little bit of a boost, but it's not a great thing in the long term for Federal Reserve to decrease the rate hike path and not be able to complete the rate hike cycle that they anticipated. All right, so we have that. Some people, the market expects to have just 1 rate hike in 2019. Some people are expecting no rate hikes in 2019 and even a cut in 2020. All right, that's the outlook. So there's a softer economic outlook, and as a result, more dovish updates from the Federal Reserve. I think the Fed's seeing the same thing we are here. We're coming due for some sort of recession and or a pullback, at least, of the markets. This rally to start 2019 is very suspect so far. In order for us to really be bullish, we got to clear 2630 on the S&P 500 with decent volume. Below there, you're going to have some selling come back into the market. A lot of commodity trading advisors, CTAs, have buy stops planted above 2630, and I think that's a key level. So as we approach that, that's the turning point, the 50-yard line, if you will, in football. All right, so we talked about that. We have a huge economic calendar for today's agenda. Jerome Powell will speak this afternoon before the Economic Club of Washington and other Fed officials. So Tom Barkin, he is a non-voter, so basically dismiss everything he says because it doesn't matter. All the rest of these guys are voters, though, on the current Federal Reserve Board, and also regional Federal Reserve banks. It's not just the board. All right, James Bullard, Charles Evans, Neil Kashkari, Richard Clarita, they're going to give presentations throughout the day. Today is Federal Reserve Speak Day. And today, I'm going to caution you, you have to absolutely have a news squawk. You got to have some kind of service that gives you real-time news, because you could really be left holding the bag if you don't. All right, market could drop 10 points, like what's going on? And there was some news or some kind of statement that was said. These Federal Reserve speakers are trained on how to speak. Sometimes they'll go above and beyond and offer you a little bit of a tidbit or a nugget of what they think is coming down the pipeline, and the market reacts. Every trader at every desk around the world is watching and listening for what these Fed speakers are going to say. So today's going to be one of those news squawk days in the pipeline. Here's the schedule of them speaking. 12:40, Fed's Bullard. All right. 12:45, Jerome Powell. 1 p.m., Fed's Evans. 1:20 p.m., Fed's Kashkari. So it's going to be a busy day. Other than that, we don't really have a whole ton of news. In fact, the only thing we have between now and the Federal Reserve speakers is natural gas inventory, which is at 10:30. All right, so we're going to see, I believe today, some normal price action. We've sold off, and I think we're going to test some more lows to see how much the sellers got in them. We've had very strong bullish sessions coming out of the post-Christmas holiday. And before Christmas on Boxing Day, you guys will remember the market tanked a lot. Donald Trump called Steve Mnuchin. Mnuchin started calling banks, issuing statements that he's calling banks. They're doing everything in their power to have you believe that we're not going to go down anymore. And we rallied, we rebounded, a ton. All right, you look at oil, we're up 23% on oil. But that doesn't discount the fact, since the 24th, that doesn't discount the fact we're still down 31% from the highs. All right, so what happens here is investors have short-term memory. It's almost like they only look at 5 candles, the last 5 days, like, let's buy. If you're looking at an only 5-day chart and it's going up in one direction, chances are it's going to reverse by the time you get ready and gear up to get in on one side. So be careful. If you're long, great. If you're confident in that position, I'm not going to discourage you. When I tell you this, I think sellers are going to start to come back into the market, at least temporarily. What else do we got today? I'm going to tell you this. You guys need to know this. This kind of goes in line with risk management. It's the last thing I'll tell you for today's session, and I'm going to turn around and open up a trading room. And it's the following. If you lose 50% of your trading account, how much do you got to make to get back to where you started? All right, 100%. You got to double your account if you lose 50%. So the math for a drop is really ugly, because to recover from that hole, it takes exponentially larger gains to get back to break even. I can't tell you how few people realize that. That's why risk management and loss control is so important. The reason I say that is people will say, oh, oil's up 22%. We're in a bull. The market's up 8%. We're 12% now in the S&P 500. It's a crazy bull market. And you got to remember where we're coming from. We're still down about 14% overall. And on S&P from the highs, actually it's less than 14 from the highs, and down 30% on oil from the highs as well. And that's the larger term perspective here. A lot of economists are expecting and cutting their forecasts and expecting a softer landing in 2019. It's not, the market this year is not what you've been used to since 2009 and now, where you can just buy the dip and close your eyes and it'll work. Be cautious, tread carefully, and trade with us. We're here to help you guys. Last reminder, actually second last reminder, this Sunday at 3 p.m. Eastern time, we're going to actually talk to you guys. I'm going to answer your questions live, one-on-one setting. I don't know where I'll be, but I'm going to turn the phone on and answer your questions. And I hope you guys come prepared with some good questions, because I'm prepared to answer them openly, honestly, and with transparency. That's my personality. That's who I am. And I'll bring that to you Sunday at 3 p.m. Eastern. I hope you guys attend live. It's going to be really fun. If you can't make it, leave your question in the comment box of that video. The link's in the description, or will be in a moment. And then I'll answer it for you. But first, I'll answer the live questions. So if you're there live, you get priority. All right, you guys take care. Thank you so much for being here. I really appreciate you. Have yourself a great day today. Manage your risk trade at TRADEPRO. I'm looking to sell rallies early on until volume fails or order flow switches to the upside. Then I'll switch to getting long, if and when that happens. Have a great day. Don't get in too much trouble. And in the words of Donald Trump and meetings, bye-bye. What a great way to end the meeting. Bye-bye. Do I get my wallet? No. Bye-bye. Thank you, Marky. All right, trade pros. Let's open up the room, get some levels here. We got a full house. Victoria will talk about NASDAQ. Stephen will do oil. I'm going to start out with S&P 500. First, let me give you some stats for the day on what the expectations are for market moves and where the excitement might come out to which side. Let me just pull up the book. Let's get started.